Hey guys, welcome back to the channel where I document my journey selling options to $1 million. Now I'm switching it up for this episode with this screen here providing some visual stimulation because YouTube shows me how many people click off the video and it's like 80% in the first minute. So I'm going to see this week's video if this helps. So the account value is sitting at $276,658. So far in 2025 year to date, we are up $42,218, which is 15.26%, which is absolutely crazy. It is matching my goal of at least 1% per month. And in the past week alone, we are up 0.5%, about $1,400. So a bit of a slow week. We realized a HIMS put for $117 and IWM calls for $68, but our current holdings have appreciated in value, which I'll go into later in the video. As usual on this account, negative $1,234 on the top left here. That is that Friday. We've been having red Fridays and green weeks. I think out of all the 10 episodes of the journey so far, 8 of them have been green and 2 have been red. So as usual, what is the options wheel strategy? The options wheel strategy is where I am selling put and call option contracts. I think of it like selling insurance on stocks and just following this visual of the wheel. And again, this content is not financial advice. Please consult a licensed financial professional before making investment decisions. Don't just blindly follow what I do. So getting into the current activity here, I have continued to trade Bitcoin. As you can see, currently recording this video on Sunday, 12/14. Bitcoin sitting at around that $90,000 mark. And this is the iShares Bitcoin ETF, which follows the price of Bitcoin and charges a very slight expense fee, management fee, which is, I think, 0.35% annually. And as you can see, we sold a put for 56. We got assigned. We sold a put for 53. We got assigned, and we have a few put contracts open that we're currently in the green on this one and in the red on this one. But overall in the green, different date expiration dates, December 31st and January 9th. So if it falls below this blue line right here at $48 strike price, we will have to buy 100 shares of this. And I think I sold 2 contracts and 2 contracts. So we'll have to buy 400 more shares. I think currently Bitcoin on collateral and shares is about 10 to 15% of my account. I don't want to go over that 20 mark, but this is kind of a big play right now. I'm putting a lot of money into this dip. Hopefully it'll pay off. I do like the long-term chart of Bitcoin and this Bitcoin ETF, which follows the price of Bitcoin. So we'll see how this turns out. I'll keep you guys updated, but currently in the red on this. So, SOFI, you've seen me trade the sticker in past episodes. I haven't traded it since this huge run up back at the end of the summer in 2025. But now I feel like it's fallen to a good support level, found its kind of bottom and trading within a range. So I sold 2 put contracts expiring January 9th for the $25 strike price. So this is $5,000 in collateral. And as you can see, I'm up about 9% or $13. So continuing to trade this. I believe in this company long term. I like the technicals. I like the long-term chart. And they have shown very good fundamentals too on user growth and expansion on their platform. So going into a new ticker here, I sold a put on a company called Quanta Services, ticker symbol PWR. And this is a utility and utility infrastructure company. I deploy a very, very strong momentum, always have a strong bounce over that 90 and 200-day SMA. The orange line is the 90-day, and the green line is the 200. So it's been trading above that for a while with an overall uptrend, and I couldn't resist. I saw it fell 6% on that Friday. RSI went to 44, and I sold a put, which I'm already up 25% on in just one day, expiring January 16th. So this is this is a symbol that takes a lot of collateral, about $41,000 for the contract that I sold, but I do like the chart. I like the fundamentals. I think for all the big AI boom in the data center, power is huge. So I'm happy to be playing something that is, selling the pickaxes during the gold rush. So definitely like this company. It did fall more than its peers on Friday, again, negative 6.17%, and other utility and power companies only fell 3 to 4%, but just couldn't resist. So we'll see. We'll close this out at 50% profit and continuing to play again. But this is a ticker that you might see more. And I think 410 is a pretty support bound strike price. So sitting right below the 90-day SMA. Another new symbol. This isn't a super high IV, not early juicy premiums, but Pfizer. I think it's gotten absolutely destroyed and now has been rebounding for these last since the summer. This is when all that UNH stuff happened, and just a lot of healthcare as a sector went down as a whole. But overall, it's been recovering. If you ever look at the healthcare ETF, you'll see that, and as well as standalone healthcare companies. So even though they're not creating many new things due to funding, they're still a very profitable company and generating a ton of revenue, as well as very good fundamentals. So chose a strike price right at that 90-day SMA, that moving average. That orange line right there at $25 strike price. And I sold 2 contracts, which were up only a few dollars on. But again, this isn't a super high IV ticker. I think it's a 1.2% gain per month. So sold it 30 days out. So above my target, but not super, not like the other, like Quanta, that are providing a 2-3% return per month. But so less risky, less volatile equals less premiums, but still matching my goal. So now going into the current portfolio, the big play that I bought the dip on last time, I think we were up about 5% or maybe 4 something on last week's video. Now I'm up nearly 6%, which is almost $3,000. As you can see, Friday was a red day. We were at 7%. On Thursday, about $3,600. And if you kind of followed my last video mentality, I like small caps way more. The Russell 2000 is an ETF of the 2000 small cap companies in the US, and these perform pretty good during a rate cut environment like we are in today, and interest rate sensitive, and also they're more volatile than something like QQQ or SPY. They fall faster during dips, but they also recover faster during recovery periods, like we saw right here. So I've been outperforming SPY and QQQ these last few months. The Russell 2000 has been trading like it historically has been and like I projected. So, I mean, it doesn't take a genius to look at past trends and take a bet on if they're going to happen again. So I saw this market dip, as you can see this green arrow here. That's when I bought in, got an early assignment on 200 shares. So we sold 243 strike price contracts. And we actually also collected about 60 or $70 this last week on a call on this Red Friday. I think it's going to trade in between here and 260 for the next week or two. So if it goes back up to 258 or above, I'm going to sell another call, but realizing some additional income from selling calls as well on this ticker. So Nucor Steel, this is a very long-term hold that I got in very early on because steel is very cyclical. This is the largest steel company in the US, and I'm up about 1.5%, 1.38%, or $225. And this has always been in the red. I got a sign at the $165 strike price over the last year. I been selling puts and calls on it, so getting my cost basis lower, right in the, if I had to guess, that 140s. But this is not going to be taxed as a short-term gain. This is going to be taxed on that long-term. So I'm happy with keeping this into the new year and continuing. Aren't selling a covered call yet because I think there is a lot of appreciation to go. But once I get close to once the premiums goes up and once it gets close to the strike price that I do want to let go of my 100 shares of Nucor Steel, I will sell a call. So it's been a nice recovery since also the summer. So this is the current positions. As you can see, we are still heavy cash even after selling additional contracts, or excuse me, new contracts on SOFI, on Pfizer, on Quanta Services. We're still sitting at $133,000 in cash. And also, here is how the portfolio has been returning year to date, that 15.26%. So lagging behind the S&P 500, Dow, and the MSCI, but beating the bond indexes as usual. And again, I mean, we are lagging are these benchmarks, but we have been meeting my base return of at least 1% per month. So this is an income producing portfolio, and also running the wheels and selling options. It can underperform, like you see here, the benchmarks, but the broad indexes. But also during downturns, it is a little more defensive. About 99% of the time so far in every single market dip, on every day that's red, my portfolio is maybe 1/3 as red. But also on green days, it's maybe 2/3 as green as indexes. So that creates a little laggard. But again, all depends on what strikes you sell on what tickers. You can easily outperform, which is one of my goals. But also, it is income producing. So that is the main goal. So to end off the video, we are at 27.66% of the way there. I really appreciate everyone tuning in, and I'll see you guys next week.